This is Robert Kraft, and I'm your host on SNN.Network. And today, for this Wall Street View, I have Brent Cook from Exploration Insights. Regular on the program, we've had him on the podcast as well as doing interviews like this at conferences. So, with that, Brent, welcome back. How you doing?
Hey, thanks. Thanks to be here, Robert. Good to see you.
Good to see you too. It's been way too long, my friend.
Well, I guess you waited until gold hit 1400 to call me back.
I mean, now you know it hit mainstream, right? I mean, well, with that, before we get into some of the recent news and kind of covering what's going on in both the macro for gold and other commodities, for those who don't know, what's your background? Tell us a little bit about Exploration Insights.
Right. My background, I'm an exploration geologist, economic geologist. I've worked in something like 70 countries across the world for major mining companies, for juniors, been involved in bank studies, audits, feasibility studies, as well as grassroots exploration. In 1997, I joined up with Rick Rule at Sprott Global as his analyst, and subsequent to that, started writing Exploration Insights, an investment letter focused on the mining space, particularly the junior space. That was in about 2008. Mm-hmm. And 3 years ago, Joe Mazumdar, another excellent geologist, smarter than me, joined up and is taking over a lot of the writing at Exploration Insights. The letter is about basically what we are actually doing with our money in the sector, what we're buying, selling, avoiding, plus comments and such. So the only money we make is what we do in our investments as well as subscribers. Perfect. That's the letter, and that's us.
Perfect. Well, so it's been, like I said, about, I think, a little over 6 months since we had you on and got your insights as to what's going on in the markets. You can attest to this. I hit you up to do this interview before this week, but with the news this week about, gold having some bigger days than in the last couple of years. What's been going on? Let's give everybody who hasn't seen the news what's been going on in gold, and then maybe some of the implications from a macro perspective.
Right. Well, in terms of U.S. dollars, gold is within or at its 6-year high. But gold in other currencies and 72 other currencies is at its high or close to its high, all-time high. Mm-hmm. So gold has really been strong in everything except the U.S. dollar. U.S. dollar and gold are basically reciprocal. And I think what we're seeing here is that it's been coming for a while, in that the U.S. dollar is the most liquid and viewed as a safe haven investment on a global basis. So when there's any fear, countries, people go into the U.S. dollar, U.S. bonds, that sort of thing. But what's been happening is slowly over the past couple of years, faith in the U.S. dollar and in the U.S. economy and in the U.S. policy basically has been going negative, if you will. Our allies can't trust us anymore. We're reneging on deals. The policies are erratic. For instance, speaking today, we were 10 minutes within bombing Iran, and then all of a sudden decided not to bomb Iran. I mean, these sorts of inconsistencies and uncertainties are really causing the rest of the world to view the U.S. and U.S. economy and the U.S. dollar in a somewhat more suspect light. And so what's happening is they're moving into gold. Well, gold is a big safe haven, and I think that should continue over the next while.
Mm-hmm. I mean, so then, for, as you said on here, and also when you talked about the reciprocal relationship with the U.S. dollar and gold, and how gold is seen really as this safe haven. I mean, has this been, for the last few years? Because as some of us may know, gold and some other commodities, it's really been a tough market, right? And so, I mean, are these some of the things that, gold bugs and people who really follow gold, and that's where they know and like to invest? I mean, are these some of the things that they've been waiting on to see, not hoping for necessarily, but waiting to see?
Well, certainly on the the debt, U.S. debt is a huge issue, and there's no way we'll ever pay that back. But we can continue printing money and inflating our way out of this. That's going to get harder if foreign countries aren't buying our bonds. So it's that's that sort of thing starting to happen. And China is the biggest holder of U.S. Currency outside of the U.S. That's a bit of a problem too, and that they've got us in a situation where if they wanted to, they could start dumping dollars or not buying our debt, and that would be a problem as well. So, those things have been happening for a while, and that's kind of what the gold bugs have been watching. But with the U.S. Federal Reserve just recently stating they are probably going to cut rates, indicating a slowing economic, global economy and such, plus this problems in the Middle East and trade wars, et cetera, all that's starting to pile up on it, and that's kind of why it's happening now.
Got it. So then, what's the implication then for the gold industry, as for miners, companies that are mining for gold, that are drilling for gold? What does this mean for them?
Well, I'd say for half the gold miners, probably, this goes straight down to their bottom line. This is 6% increase in the gold price, or let's call it $100 increase in the gold price, is $100 more per ounce that they're making, and that's probably half the companies. The other half the companies that have been struggling, as soon as they get a rise in cash flow, they're going to fix up what they have been avoiding, not fixing, and blow it. So you got to be careful which companies you buy if you're looking for an increased cash flow. But it's certainly a positive in terms of companies mining gold, and it gives the miners more leverage, if you will, or more currency, in terms of currency and cash, to buy the deposits they need, because that's really, to me, that's what we're focused on at Exploration Insights is these companies are mining in the order of 91 million ounces a year, and they're finding in the order of 40 million ounces a year. This has been happening for the past decade. So there's a deficit there that they need to fill by buying and putting new deposits into production as their older ones start to die off. And that gap is really key to people investing in this sector, especially the junior and exploration side of it.
So that's the relationship right now, is that these majors are still looking, because we've talked about this a couple times on here, and that majors are now looking for miners to add to their portfolio so that they can hopefully they bring these projects along to eventually become a mine. So where are we at currently? I mean, what are some of the key things that the majors are looking for in these junior mining companies as potential acquisitions?
That's a good question. I think that's an important point, as well as the past 2 or 3 years, we've seen major mining companies investing more and more into juniors in terms of joint ventures, or actually equity placements, that sort of thing. They're being very selective, and they're doing it in companies that have land packages that are large enough that it makes a difference if they discover something. Generally what they want is a whole district. So if you can make a discovery, they'll pay up for that discovery if the land package in geology is such that they can see additional discoveries coming down the road as they continue exploring that land package. So they're looking for land packages, they're looking for a geologic environment that is conducive to multi-million ounce deposits, if we're talking gold, or multi-billion pound copper deposits, that sort of thing. They're looking for big deposits that they can put into production and will last 20 years down the road. Consider if some company makes a discovery today, it's probably 2 to 3 years before they drill it out and define it. Another 2 years of studies to make the economics right. Another 2 to 3 years of permitting, depending on what country and location you're at, and then raising the money and building it. So on average, it's taking 10 to 20 years from discovery to production for a decent sized deposit.
And that's only if the company as a junior stayed a junior, even if they, but if they joint ventured with these major mining companies, does it get expedited, or is it still take that long?
It still takes that long. One company we were invested in that was active in Serbia made a discovery. This is Reservoir Minerals, with their joint venture partner. And it took probably 6 years to define it and get it ready, and another 2 years before it was bought out by one company and then outbid by another company. And that's sort of what you want to do. We ended up, I think we started off with a 60 cent investment, and this thing was eventually sold for a little over $9.
Mm-hmm.
That's what we want, but there's got to be a big, solid deposit.
So how do the major mining companies then forecast this? Because if it's, these can be long bull and bear cycles. So how do they forecast, like, all right, gold's going up now I'm interested? That doesn't make any sense. You guys are all natural contrarians. Why would they go in now if they're seeing a spike and then look at it? Just help me figure this out.
I don't think they know. Really, you're looking at the economics of a potential discovery,
Mm-hmm.
and your number one input is, call it, the gold price. But that's not going to be in production for, call it, 10 years. So you're looking 10 years out and trying to decide what the gold price is going to be. So I think generally what you use is close to spot right now. Let's call it 1400.
Mm-hmm.
And the assumption being that you're going to have a good enough deposit that your all-in production costs are below 1,000. So you've got a $400 to play with there. And with gold, and certainly with copper and other base metals, the fact that we're finding less than we're actually, or finding not enough to replace what's being mined, you've got to think that the gold or copper price is going to be going up in order for them to put these into production and sell the copper and such at a reasonable price. Mm-hmm. So I think, the project that, looking forward with ignoring the dips, the busts and booms, these prices are going to continue going up. And that's kind of what companies like Rio Tinto and BHP are looking at.
Mm-hmm. And for full disclosure, are you a shareholder in BHP or Rio Tinto?
No, they're way too big for me.
Well, another question that we always talked about on here is, and you actually alluded to this a little bit already, is the finding of new discoveries, and how difficult that is to find. And it sounds like that equation is made even harder because the majors are really only looking for district scale type projects, so help me out here. I mean, what are you seeing right now in terms of the business strategy for these junior miners when they're going out to look at potential new discoveries and then wanting to JV? Like, how is that working right now?
Yeah, well, I think if people watching this are thinking about it's time to invest in mining companies or junior exploration companies, you've got to understand that there are probably a third of the companies listed in Canada that are just going out and recycling old crap, hoping to get enough money, to pay themselves and maybe make the stock run somehow and get it off on a double. You got to be real careful of those. There's another half or a third that are just not doing anything useful at all. And there's another third that are probably doing good, solid work where they're conceptually coming up with ideas and targets mm-hmm. that offer the potential of a major discovery. Now, the problem we face is that, in the late 90s, most of the world opened up to exploration. So there was a flurry of discoveries because we could go into other countries in Africa and Europe and South America, and these deposits were more or less sitting at surface. Okay, we've run through those. And then Landsat imagery came in, and they gave us the ability to see alteration and such in areas we hadn't been before. So there was a flurry of discoveries after that. But now we're at the point where I would guess 80% of the discoveries are going to be made under blind conditions, meaning we can't see the rocks we're looking for. They're hidden by something else. So you're taking geology from one environment, call it, you're looking at something in the Andes, and you're projecting the geology, the volcanics, call it, under more recent cover of lava or ash or something, and doing some geophysical work and saying, okay, under this barren rock, the geology is right for discovery. But it's going to cost a lot more and take a lot more time to do that. So junior companies are now faced with how are they going to raise the money to do that exploration? What would have cost used to $1 million is going to cost $3 million. Mm. So and they're bringing in partners like Newcrest and different companies, Newmont, Anglo. They're coming in and partnering with these companies so that the companies themselves. They don't dilute their shareholders out of the possible discovery. But if they do make a discovery, they've got a strong partner with the technical and financial ability to bring that into production. And they end up with, call it 20, 30% of the deposit, which is a big win.
So, and for full disclosure, do you own any of the companies that you just mentioned? I think you said Newcrest, Anglo, and Newmont?
No, I don't.
Okay, cool. I have to ask. Compliance.
No, that's fair. I own a number of companies they're joint ventured with.
Okay.
Those are the sorts of things we're looking for, is the ones that are, 10 to 50 million market cap, that if they make a discovery, we've got a 10 bagger.
Got it.
That's the focus, yeah.
Got it. I was going to say, like, what, I haven't asked you this in a while. And for those, again, who this might be their first time seeing you, what is your criteria other than, 10 to 15 million market cap? What are some of the things that you look for as a geologist, because you have that background?
Well, certainly the geology's got to be right. I've got to see a geologic environment that offers the potential of a real discovery that makes a difference. There's a lot of people out there with nice properties, but even if they're successful, the risk, the reward isn't worth the effort. They might make a discovery and find a vein that's got 1 million ounces that runs 7 grams. And in the end, they've had to issue so many shares that despite the run up in the market cap, the share price is flat to down. That's the big thing you want to avoid.
So then adding that economic side to the economic geologist that you are, it's not just about seeing a potential real discovery. You also look at share structure. You see how they've allocated their capital. You see how much ownership it is. So you really take some traditional value metrics when you're assessing how the company is, at least from a capital structure side of things.
Certainly. I mean, that's key, right? That's how you make money in stock. I mean, it took me a while, and I've had some hard lessons. I got the geology right, but the stock wrong. So it's all got to come together.
Got it. All right. So one more question too, when it came to the 80% of the discoveries that have been made, that most of them, the at surface ones, are gone. One thing we've talked about before was going to various new jurisdictions to go and find new potential deposits or real discoveries. I mean, where are we at right now? Has it loosened a little bit, or has it gotten tighter?
By and large, a lot of the countries that had opened up are getting more difficult. It seems to be a counter-cyclical thing governments do, is when the gold price or copper price is ramping, and a lot of companies come in and start looking for stuff and start finding things. They look at it and decide, let's tax them or do something to get more money out of that. They usually do that as the bust is coming, and so they're increasing taxes or making it more difficult to explore, more costly to explore, just when they shouldn't be. So in general, it's getting tougher to find the right jurisdiction to to go explore and make a discovery. Plus, it's getting more dangerous. Some of the countries in West Africa that were opened up and looked pretty good, like Mali or Burkina Faso, they've kind of gone downhill in terms of security and that. Likewise, Colombia had opened up and looked real safe, but it's gotten more difficult. On the other hand, I was in Japan just last year looking at some projects, and Japan is just opening up. So that's a great place to go look. Western Australia is looking pretty good. The Western U.S., well, I should say Nevada, Idaho, and maybe Arizona are good places to be exploring. Canada's always good. Quebec's good. Alaska's good. I mean, there's still good places to be. Chile, Argentina's getting more difficult. Nicaragua's I can go on and on, but you got to know where you're going.
I mean, are they getting more restricted because they see that prospectors are coming in and looking around and seeing good quality projects, or is that really why they're tightening up, because they want to nationalize it and keep it for themselves, or what's the reasoning why it's like that? It can't just be the price of gold going up.
No, it varies from country to country. I mean, Zambia now is trying to impose taxes and such on some copper mining companies down there. In Ecuador, the government or the local government tried to restrict mining, and the national government came in and said, kind of put a halt to that. So it's variable. It's really variable.
Cool.
You just have to know. You have to know where you're going and what the policies are.
All right, Brent. So we'll wrap up here because I'm going to see you very shortly again, actually, probably in about a month to get another update. But, until then, what are some things to look out for that our investor audience should know when considering maybe looking at junior mining?
Share structure, is it tight? Who owns the shares? There's a lot going to come out on good news. So you want to know who owns the stock and how much is likely to come out. You need to know what sort of cash balance they got and what their funding requirements are. I suspect over the next 3 weeks, we're going to see a rush of financings come into these broke juniors. So there's a bunch that are going to come money, right? The geological environment, is it conducive? Do the people running it know what they're doing? And can they explain it to you? I mean, I think you're going to the Sprott conference. Is that right?
Yep.
Okay, so I'll be there as well, and so will Joe. That's a great place to meet companies and see what's really going on. So I would definitely suggest anyone go to that. Joe and I will speaking. We're speaking 2 or 3, I think 4 times there. Going to have a couple of workshops and such. So that's really the best way to do is look at that. Look at actually educating yourself.
And Vancouver is beautiful at that time of the year.
It better be.
Well, Brent, thank you again for joining me today. I'm excited to go to see you up in Vancouver as well. Where can my audience go and find everything they need to know about you and Exploration Insights?
Right, it's real simple. The website's explorationinsights.com. There's a lot of information available there, presentations, things we've written about. It's all there. The subscription is monthly. You can try it for a month. If it doesn't work for you, quit. And with the subscription, you get to see everything we've ever written, bought, sold, our history, etc. So, go there and see what you think.
Perfect. And I'm going to get you on Twitter one of these days, I swear.
I signed up, actually.
You did? All right.
Yeah.
What's your account?
I don't know. I don't see that. I don't get much value out of Twitter. I don't know how to use it, I guess.
Well, I'll do a workshop with you in Vancouver.
That sounds good.
All right, man. I'll see you up there, okay?
Hey, thanks, Robert.
Thank you.